Hey, good morning, everybody. How we doing out there? It's Doc with ReadySetTrade. Today is Wednesday, the 12th of April, CPI day. All right, let's see what's happening today. So we had CPI coming out. We have Thomas Barkin later on, and I think we have someone else speaking as well, too. Let's see, who is that? Who is that person? Let's see, it's Mary Daly is coming up at noon Eastern time. And then, of course, we have the Fed minutes. So there's plenty of landmines out there today that could move the market around quite a bit. Again, the issue is inflation. What's going on with inflation? And the consumer price index came out today, and it was actually better than expected. So core month to month went only up by 0.1%. We're still sitting at 5%. Year-to-year inflation, that's well above the Fed's target of 2%. So are we going to be able to hit that 2%? Probably not, unless they want to break all the banks. All right. We have with us this morning, we have Dripka, Scott, Fred, John, and Len. Good morning, folks. Good to see you guys. All right, not much in the way of earnings until we get into Friday. Friday is going to be a big, big day of earnings. All of them are going to come out before the market open. So BMO before market open. So we're going to see markets rock and roll around the 8 o'clock Eastern time frame. This is when most of these are going to be released. And then into Monday next week, we have Schwab. And then Tuesday is a whole bunch as well, too. Bank of America, BlackRock. No, that's Bank of New York Mellon. Goldman Sachs, Lockheed Martin, and then in the afternoon, we have ISRG, Netflix, and United Airlines. So we start off with the tech darlings. And then Wednesday has Tesla as well, too. So things start to really rock starting on Friday. Friday this week, things are going to move. So we're still pricing in a higher probability right now of a 25 basis point rate hike. And then as we get into June, nothing. And then we're actually cutting rates by the end of the year. So we'll see what happens. Again, these have been wrong quite often lately because things change. Crises come and go, right? Good morning, everybody. Good to see you out there. Again, my name's Doc with ReadySetTrade. Welcome to our live show. So this morning, we're going to be looking at a bunch of different stuff. We've been looking at smaller zero DTE, so more narrow, as a way to combat the extra volatility, because right now we're not being paid all that well to take on the risk that we're actually seeing move. So in other words, we're seeing, if we go out to the ATR, right now the ATR is showing, we're moving about 50 handles a day right now on average. And look at this move that we had here. It went straight for 200 points, over 200 points, right? And we're not being priced into that. There's no way that is in the expected move for that week. No way. Our expected move is only showing about 60 or 70 points at this point. So here's our flag. And the other thing that we want to keep in mind too is that range contraction leads to range expansion. So as of today, if we look on the ES, and we're going to see the SPX follow suit very soon in about 5 minutes, here is the ES is now fully charged on the daily chart. So we had exhaustion. Into last week. We hit it hard. We were setting up all kinds of different iron flies, iron condors, because we felt that the price would stay within a range. It did. It did stay within a fairly tight range. Now, again, anything could happen from this point. What I would like to see is a linear breakout to the upside. That would tell me that the market character is changing. It's changing over to what we call quiet and trending, which is typically what we see in a bull market. However, if we do not see the price break out, or if we see a false breakout back into this pattern, we're going to see a lot of longs scrambling to get out, and this is probably going to drop the price down to here, maybe as low as 4,000, maybe something above that. So we would see the typical flag false breakout, drop like a stone, and then we'd see whether or not we're going to either slingshot from that point or continue with a lower high and go lower. We could go as low as the October lows, which is 3,500. So a lot is banking on this move here. This move is going to be huge because we are full energy across the board, and we're looking for that next big move. We've been trading in a fairly tight range for the past 3 to 4 months now, since the October bottoms. The October bottomed, and then we got into the first of the year. We've been trading in a very tight range so far this year. So tight ranges like that, consolidation, range contraction leads to range expansion. We now have about, I think there's about 3 minutes left before the opening bell. Yeah, about 3 minutes left. Okay, so let's see what's happening yesterday. Yesterday, what do we have? This was Tuesday's price action. Tuesday's price action was very tight. So we put on a 15 wide iron fly, and that was that's about all we needed, really. So here was the price action into the 10 o'clock hour. That was the opening range that we had. Opening range was really, really tight. And so using a 15 wide fly was actually it turned out to be a good move because it did take me about 90 minutes to get $50 per contract. It took me about until 11 o'clock or so to take this trade off. But it ended up just fine. So we could have used 15, 20, anything like that. That would have worked out. But 15 lately is reducing my risk to an acceptable level if we see the price really, really moving. All right. Good morning, folks. Welcome aboard. Glad to see you in here. We have the opening bell coming up in 2 minutes from now. 2 minutes from now. And right now the futures are up 20 points. We've seen them up quite a bit more, and we're giving back. So we're going to start out the day with a gap. We're going to see if that gap holds or not, or whether this turns into a bull trap. That we don't know yet. Right now I'm looking at the expected move for the day being 27 handles. That's larger than what we've seen recently, which is kind of nice. That gives us a little bit more to work with, and I may do the same thing. I may do the same thing as yesterday, go with a really narrow iron fly, maybe 15, maybe 20 points, in order to reduce the risk. Because the problem is we're going to see movement. We're going to see movement today. Now, best case scenario is if we don't get any movement at all. And then, boom, we're going to be in and out in no time at all. But the problem has been, especially with markets all charged up like this, is we start out the day fairly lame, and then all of a sudden it just pivots and runs. So we'll see whether or not we get that. Okay, 45 seconds to go for the opening bell. So what we're going to do is, first of all, you see these blue lines here. The blue lines are the upper and lower expected move. We're going to be moving them. We also have this blue line here. Probably need to change that color. Let's go ahead and change that color to something different. Let's do some kind of bizarre lavender. That is our anchored VWAP. Anchored VWAP. And you can see how yesterday price was just kind of all over that. So no real edge with the anchored VWAP. 10 seconds to go. And what we're going to grab, first of all, is the expected move for today at the opening bell. So here we go. And that's going to be 27.08. 27.08 to start off the day. Now, what we need to do is we need to find out where we started the day. Where did we start on the ES futures? So I'm going to go to the gap chart, which does not start printing until the opening bell. And you can see that upside gap, and I'm going to go ahead and paint that upside gap for right now just to keep track of that. You can see where the price closed yesterday. Seems to be that we're heading for the gap right now. We'll see. Okay, so the yesterday's close to today's low. There is the gap for today. Good morning, Juan. Glad you joined us. So the opening print for today is 4158.75. So 4158.75 is where we started. And that gives us, when we combine that with the SPX expected move, the upper expected move is going to be 4185.83. Lower expected move, 4131.67. So just linear math. And so I'm going to move these around. Upper expected move gets moved up to 4185.83. 4185.83. There we go. It's all the way up here. You can't see it right now. There it is. And here's the lower expected move. Let's go move this one. And it's going to get moved up to 4131.67. And there we go. So some of these other studies, I borrowed this study from somebody else. This is the daily trading range versus the 5-day average true range of 40.91. So we're kind of looking to see, hey, is the daily trading range inside or outside of the 5-day ATR? So keep an eye on that. That is our gap down here. The gray box is our gap. The red box here is our opening range. This is the opening range from the opening bell until 10 o'clock Eastern time. Okay, so far we're not moving around very much. Let's go see the market internals. Let's see what they're doing. Market internals started off sort of strong. We can see the tick here is meeting initial demand. This is going to mean revert down to zero pretty quickly, I think. And the AD SPD is going to do the same thing. So we'll see whether or not this gap is definitely in play for right now. Now, let's see what I can do in terms of, let's compare things like, let's see if we can do maybe a 15 wide iron fly. Let's compare that versus maybe a 20. So I'm going to center this to begin with, 41.35, and then go up and down 15 points. So the long call is going to be 41.50. And then the long put is going to be 41.20. So that's about a $12 credit. So we don't have much risk on this trade. Not too much risk on this trade. Let's expand it out. Okay, so the most we're risking on this trade is $295. Now, the big feature of this is it's got a very wide, slow T+0 line. That's the gold line here. That is showing the realized profit and loss right now, right this second. Okay, I'm going to compare that versus a 20 wide. I'm going to go to a 20 wide and see how that one looks. So we're going to analyze selling an iron condor. We're just going to add a different one to the analyzer. We're going to center that at 41.35 and add 20 points in this case and subtract 20 points. And that brings us a bigger credit, but more risk. Okay, so here's this one. Credit is, we're never going to get this credit here. It's a matter of grabbing something and getting in and getting out of the trade. So the risk here is about 500. And we would look to see if we can get at least a $50 per contract. So in the room here, we'll do 50. We typically do $50 per contract. And outside of that, I will do $100 per contract. Sometimes I can get that, sometimes I can't. Sometimes I have to. If I start to see the price moving and getting on its horse, I will just bail out of the trade. Just bail out of the trade. All right, so let me compare these two. This is the very simple little $15 one. The advantage here is that it's the risk control is much better. And so this allows us to take a deep move down, price runs back up again, or maybe we get a big rally up and then the price comes down again. As long as we get some type of mean reversion during the day, this one will be just fine. But there's no way we'll close this by the end of today's session. So those are a couple of things that I'm looking at. Typically with this type of expected move, we would do a 25 wide. And let's change this 20 wide to 25 wide and see how that changes things. Bigger credit. Much wider. The advantage here with something like this, we're taking more risk, but these are much, much faster. So when you size this, or when you spec this out to be just slightly wider than the expected move, which is the way that we've been doing this the last 3 years, then the big advantage here is speed. Typically, we can get in and get our fair share and get out within maybe 20 minutes or so. All right, let's see what's happening with the market. We don't have much movement whatsoever. Not much movement. And I'm not seeing that much in the internals, although the internals still do look strong. Now, the thing to keep in mind here is this is our gap chart. Here's resistance right up here. So those are the former highs from last week. Price has been unable to get above those, but now it's got a full load of energy on it. Let's look at something else while we're here. I'm going to go over and hide these simulations. We're going to go over to our iron fly. I'm sorry, this is our iron condor for this Friday. And you can see the price is getting close. It's within maybe 10 handles or so, that short strike up there. Now we're still looking to get out of this at 215. So if I look at the working order here, trying to get out at 215, we got in at, I believe, 250 or 255. And so it's showing just very slight profitability, but if we can stay in this, for just a little bit longer, we'll be okay. All right, what else is happening with the Russell is also, let's look at the RUT. We have an April trade on that. And where is that IWM? There it is, the 28 to the call spread. So we're going positive on that call spread. We've gotten to that. That's working out for us. So we're looking for, on the IWM, we are looking for that to hit 98 cents, and it's at 55 right now. So it's slightly positive, looking for that to hit 98 cents a contract to get our 100% return. So if the IWM, the Russell, continues to go higher, we'll get that to fire. All right, so the NASDAQ has joined the party today. Let's look at Market Watch and let's see what's moving. There's a fair amount of green today, and we're seeing a lot of these big cap tech stocks that are showing green as well too. Okay, so first of all, we'll look at the sector spiders. We have the VIX going down today. We have almost all sectors up with the exception of staples. Staples is the only one that is negative today. Looks like right now financials are leading the market, and this might be an attempt to run up to earnings. So if we look over here at JP Morgan is the bellwether for this Friday's earnings. So it's hanging above the 200-day moving average so far. Let's see what else we have here. Let's look at the Dow. I like looking at the Dow because it's a quick view of 30 stocks, and you can see most of these are up. So industrials are up today. We have tech up today. We only have a couple of these that are down, and they're not down all that much either. And looking at the NASDAQ is quite different from yesterday. We have the majority of these up. So it's kind of 4-1 right now, are up. 4-1 advancers. And some of these are quite strong, like Datadog, Lucid, PayPal. Let's see how AMD is working today. AMD is negative again. JD is negative. That is a Chinese company. PDD, I believe that's Chinese. Workday is negative. Yeah, interesting. All right, let's see if we can do. Okay, so there we go. Now we get some movement. Now we got some movement. And this is going to be good for our iron condor if it moves down at all. Anything at all, even another 5 points or so, and we're going to fire this order. So that might be good. So far, right now, I'm avoiding entering the iron fly. I'm avoiding the iron fly for right now. I want to see the price move out just a little bit more. I want to see if it expands this opening range. I want to see if it goes after this gap here today. Because we did start fairly strong, and we're giving back quite a bit of it. Was this good news already priced in? Was the fact that the CPI was going to beat expectations already priced in? And did we rally on the back of that already? If that's the case, then people are going to be taking profits. We are seeing internals coming in. I mean, this is what I would expect to see. I would expect to see the tick coming into zero from a high value like that. But what we really want to see is the advancers minus decliners on the S&P 500 right now is showing 293, so that's still fairly bullish. But we're starting to see this trend down a little bit, so we'll keep an eye on that. Yeah, we're close here. We're close. This might fire us in. We're not looking for anything massive on this trade. We're just looking for, well, something else just fired. We're just looking for our fair share. So if we get down to 215 debit, we're getting pretty close. So this may fire, and then we'll fire that into the room as a trade update. So yeah, now we're coming down again. So this is my concern about putting on an iron fly today. Is like I didn't think that. I wanted to see the market show me that it wanted to really stay range bound, and it didn't stay range bound for more than about 5 minutes. Anybody have any questions on what we're doing here today? Okay, banks. Let's see. Is anybody changing? Let's go back to our sectors. Let's see what's changing here in the sector spiders, because we're starting to see a little bit of weakness coming in. Okay, XLK, this is where it is coming from. The tech is weak again. Tech is weak. Let me see what's happening with interest rates. I'm going to bring over another chart. I like Trading View for some of these things. It just makes it easier to find some of these instruments. So this is the 2-year note. It's not going anywhere so far today. Let's see where the dollar is going based on. Sometimes you got to look after these big reports. So the dollar's dropping, and that's equity friendly, at least for now. That's equity friendly. We'll see if it remains doing so. But right now, tech is, and we've also seen the VIX coming up slightly here. So watch what's happening. XLY is giving up some of the gains, and we have a lot of sectors giving it up. XLK is, we have the NASDAQ about to go negative for the day. And this is why we're seeing continued weakness here coming in. So there's a very good chance that let's get our anchored VWAP set up as well too. So we're going to change our anchor to today. There we go. And there's our anchor. You can see that the majority of the price action is occurring below the anchor. And we're about to fill that gap. And there we go. There's our low probability iron condor firing for the week. We are done with that one. So let's get that announced into the room. This is our member platform, by the way. And so we're just going to tag this with open and closed trades. Let me get a reading on this thing. So we're rolling in this for 2 days. And that's about a 10%. I was just looking for a quick 10%. Actually, we got a 16% minus commissions. Just a quickie. So we may do more of these in the near future. All right, let's reset our portfolio. Okay, so that one's done. Always be closing. There we go. We have just about filled the gap for today. So all this euphoria off of the CPI report, giving it back. Giving it all back again. So the opening range right now is about 21 points, which is pretty big. And it's a big chunk of the expected move. You can see this here. So if we look at our entire expected move, so there, between the blue lines here, we expect a 68% probability that the price will close within those blue lines, plus and minus. And we've eaten up most of that real estate, at least in one direction, within the first 19 minutes or so. So now we have a relief bounce. We've just about filled the gap. That's close enough. And actually, we have a previous. No, that's not a gap. That is yesterday's opening range. Let's take a look at the gap chart here and see where our gaps exist. You can see some of the huge ones that we had down here from October. Some of the more recent ones that we're dealing with are these here. So that's a gap. Here's a gap. I'm going to get rid of that line here. We do have a small gap here. I mean, these are all targets. These are all, everybody sees these. And we're pretty much done with today's gap. We are pretty much done with today's gap. But these might be targets. So here's what we might be seeing. So what we're not seeing is we're not seeing a sustained breakout. We're not seeing a sustained breakout. So we're seeing kind of the same thing that we saw back in early February, where we tried to break out and got hauled back down. So this may bring into play some of these gaps down here. This may bring into play some of these gaps to the downside. Now, ultimately, this may end up being bullish. Sometimes what happens is we pull back to the gaps or some other technical target like this. Everybody gets completely bearish, right? Everybody's bearish. Everybody's starting to go short, and then institutions say, "Ha, thank you very much. We'll take it from here." And it squeezes everybody out. And if you would look at this on a larger time frame chart, so remember, if you look at this on a larger time frame chart, if you separate the emotions from this, if you see the price thrusting up like this and then pulling back, you would say, oh, it's just a pullback. You know, it's easy to look at this on the chart and see this and say, oh, well, that's just a pullback. Look at that nice rally from there, without going through the emotions of what it felt like to go through this pullback, with everybody at that point saying, I quit. There's no way this thing's done. We're going down to 3,500. And it pivoted and took off to the upside for, what was that, a 400-point rally? That's how this market moves. That's how this market moves. And so I would not be surprised by this kind of move from here, actually pulling down, because everybody wants us to break higher, but nobody believes that it will. That's the problem with today's market. Very, very deep skepticism. NASDAQ has gone negative on the day. It's dragging down the S&P. We're trading below the intraday anchored VWAP. So that's the volume weighted average price. So that gives us kind of a dynamic support and resistance line that we can trade from. Okay, so we got that. We're firing off some condors. Right now, I'm not really interested. So that one's gone. Not really interested in playing a fly right now. You can see if we had done the 20 wide. Now this one's the 25 wide fly. If we'd done the 25 wide fly, this one would be, I wouldn't say in trouble, but taking some heat. If we'd done the original 15 wide fly, the risk management's excellent on this, but we're not going to make a profit out there. So we would have to see a mean reversion back up again. So right now today, with today's volatility, and also we have to go through Fed speak at noon. So we have Mary Daly coming up at noon. We also have the Fed minutes at 2 p.m. today. So today may be just one great big, what's called a high wave candle. High wave candles when we have a big trading range and a relatively small real body based on that. So based on where it closes versus where it opens is pretty small, but the trading range can be very large on something like that. It shows a lot of indecision. That's a high wave candle. That's kind of what I would expect to see today. There's the bounce. We filled the gap. There's the bounce, but it's still below the anchored VWAP. So I would expect this to create a lower high for right now. Let's look at the market internals. Let's see what they're doing. Actually, they've made a nice recovery. They did go negative shortly. And this is a relatively thin market this week. We're not seeing a whole lot of volume. So this is where the market can get pushed around a lot. So no surprises so far. All right, we got about 5 minutes to go. This is a tougher call for the iron fly. Tough call for the iron fly right now. Let's see, do we have anything coming up at 10 a.m.? Atlanta Fed business inflation expectations. Nope, that doesn't matter. Notice how there's been very little time decay on this trade. We set this 25 wide up 15 minutes ago, and it is not decayed in the least. Or there's a little bit now. Let's watch and see whether or not this VWAP does its thing or whether the price jumps through there. We are seeing a good pump on the advancers minus decliners. So mission accomplished as far as the gap. That's close enough that I'm just going to remove it. That's considered to be a gap fill. NASDAQ has gone positive again. Let's see what's happening in the, there's the XLK has gone positive again. So we've gone through our little dip here. All in a day's trading. So let's watch what happens to the VWAP here. We'll find out whether this is just going to print a lower high and roll over, or we have, this could be, now this fits the pattern of what I call the Groundhog Day price movement. Way back in the days when we had bull markets, so this is everything up until the end of 21, for the most part, what we would do is we would see the market either do one of two things. It would either gap lower and start the day negative, and then it would slowly, persistently close higher. Or what we would also see is a gap higher, get taken out, the gap filled, and then a slow, persistent move higher into the end of the day. That's the Groundhog Day movement. And we may be getting that. Notice what's happened here at the VWAP. Amazing, right? That's what I found about this thing. Is like the anchored volume weighted average price is being watched by institutions here, making decisions based on the anchored VWAP. So this helps us understand what's happening intraday. Half tempted to get back into futures trading again. That's a tough business, guys. Looks easy, in the rearview mirror is very difficult. It will bring out every bad habit that you didn't know that you had. It will also create more bad habits than you didn't want to have. What I found is that to be an effective futures day trader, you have to get into a zone. You have to prepare yourself to think like a robot for a very short period of time. I don't think people can do it all day. I don't think people can do it for more than just a few minutes at a time before the lizard brain natural reflexes kick in and take over from. And so it's the same old things, right? It's the same old problems that we all have, like, oh, there it goes. Oh, wait, don't leave the station without me, so chasing after a trend that happens intraday. So an example of that would be like this thing takes off short, right? It takes off short, puts in a lower high, lower low. So there's a nice trade below the VWAP. So you don't get that short because you were indecisive. And so you say, all right, on the next pullback, I'm going to take that short. And so you take that short and get stopped out. It's the same old thing, right? Intraday trading will expose you for who you are and how you think. Okay, so we have our opening range printed now. Technically, what I'd like to see is I'd like to see an entry into an iron fly, which would be within the middle third, and we're close to the middle third. But so far, we've been unable to trade much below or much above the anchored VWAP. In fact, it's still resistance. Still resistance. So right now I'm looking at a trending market, and so I don't want to put on an iron fly today. I'm looking at a trending market, don't want to put on an iron fly. Compare this versus what we had yesterday. Now, yesterday was a very easy decision for us to say, yeah, let's go for it. And then the day before that was relatively easy as well too, although it started out really weak and then just sort of went sideways. And then here's the groundhog move. And let's see if we have another one here. Here was another one where it was, I think we did a shot here. That was on 4/6, which is last week. Do I have any other ones here? Here's another one that was relatively easy to trade. I mean, it's just a very soft trend. Today's market is nothing like any of those. Nothing like any of those. A lot more range, a lot more volatility being pushed around. Which futures have I traded? I've traded just about everything with the index futures. I have not traded any agricultural. I have tried gold. It is a huge mistake. Gold is one of the most vindictive, evil contracts that I've ever traded. If you have a linear entry which meets your rules, which looks like it's a perfect entry based on your technical rules, it will get faded. I have never seen anything like gold. It is the most punitive contract I've ever traded. It's literally impossible unless you're just taking the only way is you have to take the opposite of every good setup. So in other words, if you have something like this, you have a base coming out, price trading in a base. Okay, so a lot of power, and then you see the price break out, and then you say, okay, I'm going to take a long entry on that breakout because it looks good. So you might even get a few ticks in your direction, and then you'll see the thing just plummet like that. So there is no linearity in the gold contract. It is the most vindictive contract I've ever seen. All right, so got the price going somewhere now. It wants to go higher. It's a lot of volatility today. We're getting some big moves in there. Okay, any other questions for today? Not really interested in putting on an iron fly in today's trades. Not really interested. Probably can do a 25 wide at this point. We still have 24 points of expected move left, which is not bad. You can do a 25 wide. Set your stops. Will probably work, but not really interested in it today. Okay, guys, that's all we got for today then. So we typically today's a little bit different because there's just so much risk today. It's not really worth putting on a trade because of the Fed minutes, and we have Fed speakers coming up. Tomorrow is going to be a little easier with a PPI, and then the end of the week is no problem. Actually, the end of the week, what we're going to be running into is the reaction from the banking stock earnings. So, all right, guys, you guys take care. Have a great Wednesday. Enjoy your hump day. We'll see you back here tomorrow. Bye now.